The global handover was a bit weak last night. The US indices definitely saw some pressure. The Dow fell 400 points, breaking a two-day winning streak. This was led by Boeing shares collapsing. The S&P also fell 1.1%, breaking a five-day winning streak. And the Nasdaq shed 1% after notching its 27th intraday high earlier in the session. So looks like the markets may have stalled for a bit. The futures were also flat to negative overnight with barely any movement. Now, if you come down to Asia, the mixed bag. Korea seems to be performing a little better. The Kospi was actually up 0.28% in the opening trade. But everywhere else, the Nikkei, the Topics, they definitely saw some pressure. Australia's ASX 200 saw some pressure. And the MSCI index ex-Japan traded around 0.04% lower. So Asia slightly mixed to neutral. Oil prices are looking a bit dampened and weak on all the coronavirus resurgence. People think that demand might be impacted a little bit, so they're skeptical. And there's a couple companies in the US which are now on the verge of bankruptcy or having to explore sale of assets because oil prices are where they are. So that's a bit, keeping the oil players a bit active. But that being said, it's still above $40. It hasn't dipped below there for either WTI or Brent. And finally, if you want to look at gold, gold just continues its rally. $1,800 per ounce is where we closed yesterday. So it's really moving well. And I guess as equity markets are as volatile and as asset values are as expensive as they are, given the state of the economy, gold seems like a continual safe bet for so many investors that's just one way it's not declining at all. So that was how the global handover kind of shaped up. If you just want to talk about one more sector which I missed out earlier, which is the European market, they kind of follow the US cues as well. So they closed lower. And this was particularly because in Germany you had some weak economic data which came regarding industrial production, which seems to have come in far weaker than what was anticipated. It came in at around 7.8% for May versus the 10% that was expected by Reuters. And this was following the negative 17% contraction that we saw in April. So basically the stock 600, which is the leading index there, was around 0.6% down. Here, funnily enough, tech shares were the ones losing, around 1.2%. They were leading the losses, very different to what we're seeing in the US, where the tech shares are really leading the rally. Most sectors and major bourses over here in Europe slid into negative territory. So if you look at the global handover right now, it's pretty much a sea of red.